My name is Ali Sharavi,
And I'm Alex Rin.
and we come from Stratford Preparatory. And this is our YIS pitch deck on micron technology, which is in the technology sector. And we are thinking that it'll have a 135% increase from the price of $373.25, which was on February 10th, 2026.
Let's start with the company itself. Micron Technology is one of the world's leading memory semiconductor manufacturers. Unlike other companies that design processors or GPUs, Micron specializes in memory, especially DRAM and increasingly high bandwidth memory or HBM. So it's the leading semiconductor company headquartered in Boise, Idaho, and is the eighth largest semiconductor company globally. It operates in 13 to 17 countries with over 50,000 employees, with record breaking growth after it recently remodeled its business, capitalizing a lot more on AI growth than before, and experiencing a 300% stock surge with 57% quarterly earnings.
Now, after having a quick overview on the business itself, let's take a look at the actual industry that surrounds it.
So the semiconductor memory market has historically always been very cyclical, with other factors such as trade tensions, export restrictions, especially things like the tariffs, also affecting it greatly. Other industry growth drivers include explosive AI demand in recent years, high bandwidth memory revenue, and the increasingly more AI data centers that require the memory. So Micron fits among the top HBM producers in the entire globe, with extreme HBM demand from AI GPU leaders and AI data centers, strengthening Micron's pricing power.
Okay, so now after having all this wonderful information about Micron technology and who they actually are, let's take a look at our investment summary. So as you can see on the graph to the left, we can see a year to date of a MMU stock growth. So as you can see, from February to February this year, we can see it grew from 100 to nearly $400 as a stock price, which is around that 300% recovery. And this was because in 2023 they experienced a really big drop, and from there they had to rebound obviously with the strong AI competitors that they are, and they got 300% up from their last stock price. So we're suggesting, like I said, a strong buy for 1 to 3 to 5 years. So let's say we have a bull case, right? From there, like we said, we're going to take an aggressive but assertive 135% growth in 1 year because of its AI capex and the HBM. Then we're going to look at the base case, which is around 33% for those 3 years, and a bear case, where let's say it doesn't work out the best and it goes back down into experiencing some failure in some sort of operation. Then we're going to be looking at that AI pullback, putting pressure on its pricing, and we're going to experience that downside and potentially in the next 5 years actually play more conservative. But since it's a strong AI driven company, that means there's pretty much a long term necessity for growth. And that since AI is actually improving and becoming more efficient overall throughout the years, we're pretty sure that we're going to be taking that bull case and potentially that base case because of its high 300% rebound. And of course, like I said, AI demand supports MU. And since AI is growing and becoming better and better, that's why we think that we're going to take a strong and assertive approach at this. So, as I just said, that we're going to be taking that bear case most likely, right? So, first of all, strong cash generation, we got the free cash flow, okay? The free cash flow is very important because it determines how much money they're actually making. And so far, they're getting $3.7 billion, which is heavy and very good for us stockholders. And we can see that the gross margins are around 40%, operating margins are around 26%, and the net profit is 23%, which is very high. It's one fourth that $3.7 billion, even after expenses. And the ROE isn't that bad. It's around 15.8%, but we're focusing heavily on the free cash flow and the margins because those are what actually determine how good of a company this is, and we're assessing if we should actually take action. Now, obviously, this is a pretty volatile stock due to AI's ups and downs, and the PE is around 39x, which is pretty high. However, we're pretty sure that because of the volatility and the 2023 drip, what we're looking at in a second, we think that it'll be coming back up and staying pretty volatile, but it won't drop back to that 2023 stock price. So obviously the price of sales is around 11%, which is still pretty good. It's around 11 times, and that's not even bad at all. Getting a good profit, and we're looking pretty good in our actual standing. Now, of course, even though it has a pretty high PE rate, it's very lower than actual peers such as other technology companies like Nvidia. Nvidia is very volatile, experiencing many downsides even when the market follows it. So, when we're looking at the debt equity, it's pretty good. It's around 0.21. So, pretty solid stock after all. Now, going into this chart on the right, there's that drop in 2023. Although that drop in 2023 happened, it actually starts building itself back up. As you can see, in 2024, there's around 25 billion and 778 net income, which is less, but then it grows to even more at 8 billion, which is nearly as much as it made in 2022 and 2025. And as we said, experiencing rapid growth in coming into 2026, hitting around 10 to maybe 11 billion dollars. And because of this, obviously, those AI-driven demands supported that recovery and made it possible for, of course, other possible trolls in the future, but even more possible, stronger and better recoveries. Now, obviously, investment cannot come without potential risks. And of course, Micron being a very big stock, even potentially undervalued, which we'll go into later, is absolutely no exception.
Now, Micron isn't just a volatile stock for no reason. It has very is very risky factors also influencing it, such as the very sharp declines in stock caused by industry downturns, and also AI spending slows down it significantly in terms of its profits, and also it benefited heavily from the AI demand in recent years. Also, some less severe risks, such as the geopolitical risk concerning China and other countries, including the tariffs, as said before, and its trade conflicts and export complications. Also, market expectations can pull back a lot of growth if expectations from the company's investors are not met in time.
However, the good thing about MU is what it's doing for the environment around us. Now, heading into the ESG considerations, pro environment, pro social benefits, and pro governmental, we can see that Micron is pretty sustainable with their environment around them, even dealing with pretty dangerous and harmful chemicals. Starting with environment, we can see that it utilizes water recycling to control all the waste that it generates from the electricity and through actually creating these HBMs. We can see how it recovers strategies for that dangerous waste and even reduces emissions, showing how its activism towards climate change. And they're even predicting a target of zero GHG emissions by 2050, which is a big deal because it affects climate change heavily. Looking to society and their social benefits, we can see that they actually aim for workplace safety and responsible supplying and creating that workspace that is diverse and incident free. And with the government, they want to make sure that their boards are overseeing all their operations carefully to make sure everything is being done at utter perfection. They want to make sure that sustainability performance checks are being done regularly to be able to maintain the atmosphere of the workplace. Obviously, ethics is a big deal with this because my MU wants to make sure they're doing what's right for the people, not just right for themselves, which is a big deal for customer loyalty. And from there, they want to make sure that environmental DEI targets are actually met. Now, obviously, some risks with this are resource consumption, dangerous materials used, as I said, employee and data privacy and safety, and political tensions. But with ESG considerations, it can dial those down to make sure that they're not affected heavily. And of course, why does this all matter? Well, like I said, we want to make sure that MU is actually treating the outside environment, the outside atmosphere well, and doing the good job with the consumers and the population as a whole. So they want to make sure that regulation is being done because costs can increase when they want to comply with laws and limited access to market potentially. The cost from energy efficiency, right? Those go down with the water recycling and waste reduction, which overall brings down fines and scandals. And obviously reputation. Like I said, that customer loyalty is very important for their profits. So we want to make sure they have a positive reputation for more funds and a good image with the overall environment and population. All right. Now, obviously, all of these combined bring us to our total core and that actual main impact that is actually driving MU heavily and almost solely, which is artificial intelligence and its impact. So starting off with demand, right? As we said before, the demand is high for that HBM because Micron is one of the most heavily influenced companies by the population around them, and everyone is wanting their good HBM due to how sophisticated AI is and how fast it's actually driving. And with that, they actually get into this critical market position, right? Where AI growth equals their own growth. And this is very important because the fact that AI is their only dependency can be either really good or really bad for our investment strategy. But due to the high ramps of AI and how people are demanding more and more for it throughout the years, it looks like this is actually a very good movement for us. And finally, the hardware that AI actually used is getting increased right again, getting more customers and leading to that eventual MU growth as said above.
Not only this, but the AI expansion also heavily affects MU's margins because of the mass production and usage of the AI due to the AI boom in the recent years. Also, it forces MU to expand heavily into this section of AI. With MU's focus change to AI, it also heavily increases its production of other products such as the NAND flash products as well as the high capacity DRAM and HBMs.
All right. So after knowing those marginal impacts, we want to go into some negatives as a little bit touched upon before with other slides. So first of all, the change of products could potentially affect those consumers since they are relying so heavily on MU for these products. As soon as that products change and the focus diverges to another section of AI, it could potentially affect the consumers and their loyalty that they bring to the company. After that is pricing volatility, right? Because of how volatile AI is and that section is, it's going to affect them as well with that equation that we saw recently, right? AI growth is equal to MU growth. So from there, the stock performance will change as well, and demand cycles will also increase and decrease. Finally, the AI's potential slowdown moments could be a huge loss for MU, but is unlikely due to that large impact AI has and how fast it's moving currently, and it'll be moving faster and faster throughout the years. So thank you for listening to our slideshow on MU. This is our investment strategy and how we're going to tackle our AI impacts, investment risks, and how we actually evaluate this.